Per usual, every on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday. Let's take a look at some charts. A lot of metals charts this week. Not much else looks ready to me just yet. Thought I'd bust out the old macro crypto list once again because collectively we don't have a single message here. We don't have a single takeaway. We've got a mixture of headwinds and tailwinds. We've got people saying liquidity is going to infinity, right? And that may save them. That may not. There may be a massive bull div there, or it may just not matter. It's just too hard to tell right now in the moment. We have FOMC this week. I don't think Powell is going to end QT. He might end QT, but he certainly won't start QE. So that's not going to help alts until QE's back, until free money, low rates. Rates are likely, well, we'll just put it this way. Rates are almost certainly not getting adjusted. This meeting, there's no meeting in April, so that leaves us till May with the next meeting. So for the moment, it's the same for longer. We are seeing dollar weakness, which should act as a tailwind eventually, and that's what's getting input into the liquidity equations. So the lower the dollar goes, the higher the global liquidity goes, and eventually it should work its way into BTC at the very least. We, of course, have regulatory clarity, super strong tailwind. Eventually, it'll matter. Tariff risk is a very strong headwind. Who knows what Trump is going to tweet tomorrow? Who knows if any of the tariffs go live on April 2nd? If they are worse than the market expects, we probably go lower. That includes Bitcoin. If they don't happen, or they are better than what is expected, which is unlikely, then we probably go higher. And that's just it. Like, you don't know. You really don't know. So it's hard to size up, lever up, get all bulled up and excited when one tweet could just ruin it all. Before the SPR stuff happened, there was upside risk. We didn't really know necessarily what was going to happen with the SPR. Whereas now it's downside risk. We have God knows what coming out of those fingertips, right? Who knows? And I think everyone can agree near term there is increasing recession risk. And we can't forget the yield curve is uninverted, and that is a great signal, a great warning signal of things to come. Now, yes, this may eventually lead to US printers getting turned on, liquidity increasing, but we're not there yet. You also have to pay very close attention to the unemployment rate, which may start taking up. I'm not too concerned with inflation at the moment. I know inflation expectations are infinity. They are infinity times infinity if you are Democrat. They are zero if you're Republican, so it's completely partisan. The New York Fed's estimate is around 3%. Trueflation is 1.5. So if trueflation looked worse, I'd say, yeah, we got to worry about inflation. That may happen post-tariff. We'll see. As far as the crypto side, not much going on. Technicals certainly bearish. Momentum is increasing in a bearish direction, or has increased over the past couple of weeks, obviously, since we broke 94. We've had nothing but outflows. We'll take a look at that. We still don't have wirehouses. That's something to watch for. Can these products be sold to individuals? That's what we need to see to get more money into the ecosystem. I don't have a chart for this, but Google Trends is still declining, and the pump.fun stuff appears to be over for the moment. So the Seoul casino is suffering as the fund has stopped. We do have an uptick in ETF applications, most of which got delayed last week, probably partially related to government shutdown concerns, which didn't end up happening. And we also have some IPOs coming, Circle, BitGo, Gemini, Kraken, over the course of probably the next 12 months. And then the last thing on the crypto side would be, does the US government start mining? Do they start actually acquiring BTC like they say they're going to in a net neutral way, budget neutral way? And do we see more stablecoin prints for alts specifically? But collectively here, it's not really a bullish message. I mean, the most bullish thing here is dollar down, liquidity up, and regulatory clarity. Everything else, not exactly screaming bullishness, and that's not a surprise based on looking at these charts that we're going to talk about today. For BTC specifically, I'll take a look at charts for all this stuff, but the high time frames still bullish. There's a long-term possibility that we reverse course come April, but just knowing what's coming down the pipe with tariffs, I'll have to believe it. I'll have to see it to believe it, because That terrifies me. What's coming in April. The silver lining here is everything is so bearish, it's going to be obvious when it flips bullish again. That's the silver lining. Daily cloud, 1050, alligator, 4-hour cloud, 4-hour channel, pitchfork thing. We're below the 20-week moving average. I mean, there's so much bearishness here that when we're back above, say, 94 in April, if that happens, then we're in a good spot. Otherwise, we're very likely headed back into the previous consolidation range, which is 60 to 75, something like that. Alts, forget about it. There's really nothing going on there that's, to me, worth trading. There's some meme coin stuff we'll take a look at, some oversold condition, TKC clamp, bad enough to buy type stuff. But all in all, there's really not much going on with alts. There is still the head and shoulders risk with Ripple. We'll take a look. And you really don't want to see the bearish Kumo breakout to the downside if you're bullish Ripple. I've got setups for MSTR and WGMI, which are contra to the BTC technicals. Probably early, probably wrong, but they do have defined risk reward setups. So we'll take a look at those. But these, again, sort of involve bull divs plus chart patterns. And in WGMI's case, similar to meme coins, like bad enough to start buying, I think. And then on the metals front, no surprise that anything gold adjacent is starting to look very good. Anything commodity metal adjacent starting to look very good. So we'll take a look at some of those charts as well. As far as for the spot ETF flows, it hasn't been uncertain. It's been strictly down. So again, like if we get a positive week, great, right? That's something to be happy about. But we continue to see negative weeks on the BTC side. ETH is basically just along for the ride. No one's really getting in and out of that ETF on the US side of things. Likely not until staking or in kind or whatever. But if we can string together some positive weeks, maybe that happens in Q2. Something to watch for, right? But everything very, very bearish at the moment. That doesn't mean we have to go down. You just have to realize, like, what is the expectation here? The expectation is sideways to down. The expectation is we don't magically teleport to 100K. That's the expectation. If we look at the cost basis for the ETFs, it's about 70.8 on average. I don't want to go to 70.8, but it would be interesting to see what the behavior of the ETFs would be if they go underwater again, like they were in July to October. Does it act as support? Do we see a bigger flush? Yes, we've seen significant outflows, but there's still 36 billion sitting in these ETFs. It's not like all or even most of it is out. It's just it's a tiny bit of it, but it's been a string of negative weeks. There's been a lot of talk about M2, depending on how you want to measure it. It's going to look increasing, and it is. It is going to look like it's at all-time highs, and it is. We've got China printing. We've got most countries lowering rates or trying to lower rates outside of the US. So there's certainly a bullish divergence here. We are seeing a giant leap in liquidity, not as bad as post-COVID, but pretty aggressively. And we're not yet seeing that in price for BTC. Now, you could argue maybe we've priced that in ahead of time, but post-election, we got our move, and then liquidity has moved up quite a bit, and we've only gone down since then. So it hasn't really helped us on the BTC front just yet, but it's definitely something to continue to watch. How much of a divergence is it going to take to start to pull us up? Is it going to take gold settling down for BTC to start moving, which may be the case, but the liquidity is clearly there. It's a different case if we look at 2018 or 2022, where liquidity was falling with price. That's what you'd expect. You expect a positive correlation here. And just because I'm going to be talking about miners a little bit on the BTC front, miner revenues are basically zero. So this is why the WGMI trade or any miner trade probably won't work. One reason the miner trades would work would be related to HPC AI stuff, which I don't know if that's has enough momentum right now to matter. But looking at fees are basically zero per day. I mean, there's not a lot of on-chain activity at the moment. Hash ribbons also are bearish. This is the 30-60 day moving average cross of hash rate. These will recross bullish once price starts to increase. So even though the 30-60 day moving average on hash rate is bullish and has crossed bullish, the reason it's red here still is because price is still declining. And then we can also look at the Puel multiple. Not really much to glean here. It's basically at the midpoint. Miners are not fat and happy, and miners are not in dire straits with a Puel sub 0.5. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Paired Ventures Inc., PBI, DBA, Kraken. And running down that list that we had on the daily, below the daily cloud, we do have a bull div. We are in this massive pitchfork still. Okay, this is a multi-year channel. So we're good on that front. This could go as low as 60, and we'd still be okay. I don't want to go to 60. I don't think we're going to 60. But if we did, we would technically be within the bounds of this channel. The preference is certainly to maintain support at this midpoint, to maintain support at the yearly pivot, which is at 80. If we lose 80, if we lose the midpoint, it just gets real murky. And there's a Tesla example we'll talk about towards the end. It's just not a place you want to be, because as uncertain as this is, you're going to have even more uncertainty if we go to something like the weekly and all of a sudden we're below the Kijun, above the cloud. This spot here is not where we want to be. So this is recoverable. This is not end of cycle stuff. And even 60 wouldn't be end of cycle. It would be below the weekly cloud. That's end of cycle. Anytime we've been below, here's 2022, here's 2018, etc. Not somewhere you want to be if you're a cycle believer. So weekly looks okay on the cloud, daily bearish. This is that inverted head and shoulders possibility. Shoulder, head, right shoulder yet to be formed, likely maybe something to watch for into April. But this is going to take a lot of time. We can also look at the 20-week moving average. It's all the way up there at 94. Past the weekly cloud, this is another litmus test to see how bullish we are. And on a low time frame, the 1050 cross has a pretty excellent hit rate historically. And you can see just how bearish this is at the moment. Alligator as well has been bearish for quite some time. So there isn't a trend metric on the daily that's bullish here. It's just very unlikely. If we look at the 4-hour, just because everything's so bearish on the daily, we can maybe get a better sense of what to watch into the week. We're in this broad channel here still. We're below the 4-hour cloud still. So if we can, to the end of the month, get anywhere out of this nonsense, and you can also see the head and shoulders here, right? That would be something else to watch for on lower time frames into April, when historically we have seasonality on our side. It's really the tariff stuff. If there's anything that's going to kill seasonality, it's going to be tariffs. So maybe assess the situation April 3rd, do nothing until then and just see where we're at. Everything else on the alt side, not a lot, not a lot to say or do here. This continues to be an issue for Ripple. It is trying to hold this level. I can't be bullish on anything that looks like this. It's bullish above 285. If it can hold that level, it's bearish below $2 effectively. I don't have anything else. It's just in a range here. Sol angry today, down 5%. At some point, Sol will look bad enough to buy. I think you really have to let the unlocks and the nonsense and the voting and whatever else is going on get out of this ecosystem, because this is very bearish still and remains that way. There's nothing that's going to save you on the 4-hour or the daily or the 1-hour. All of this is just clearly bearish since end of January. Okay, what do you do this week? Well, you can watch this, see how it reacts to 146 if it can get up there. But all that's very bearish. ETH, the same, really nothing to do. It's not a chart you want to just guess, because while there may be some bull divs on some of these charts, we're in a weird time, this weird pocket of uncertainty where it's probably better on most of this stuff just to wait. Now, if we look at the memes, if we look at like Pepe, what's interesting here is that this isn't like a buy signal, okay? But we clearly have a div that's continuous, and the Tenkin on the daily has acted as resistance pretty strongly, and you're starting to see this TKC clamp form. This will probably take another week, I'd imagine, but if BTC is able to pull up to 94 then I'd expect some of the stuff that's been beaten down mercilessly to have a pretty aggressive mean reversion back to 50% of the range. One way to actually trade that would be to just say, okay, I am long anything until new lows. Just say your stop loss is there, entry is about here or whatever. There's that there, and there's the setup. Is it great? Is it perfect? No, it's probably awful. It's probably a terrible idea, but it's something to do if you're looking for something to do. Not an endorsement, but it's getting to the point where it's bad enough to buy. One trigger for this would be a close on a daily time frame above the Tenkan. You can also watch this on probably like the 4-hour. And if you can get a 4-hour move above the cloud, because again, nothing here is bullish. Absolutely nothing hasn't been bullish for quite some time. It's been aggressively bearish. And I'd say most of the meme coins look like that. Another chart I put out this week was coin versus total 2. Total 2 in the red there. This works with total 3 as well. It's not just ETH, even though ETH and coin are heavily correlated. I just see a lot of people really not understanding what they're trading some of the time. You know, they look at the fundamentals of coin and they think, oh, it has to be doing so much better than everything else. That may be the case. That may be true eventually. But what we've seen over the past 2-3 years is an extremely tight correlation to altcoins, altcoin market caps. So if you're bullish total 2 and want a way to trade that, coin would be one way to do that. And we can zoom in on the daily. We do see divergences here from time to time, but in general, extremely tight in what we see on a week-to-week basis. So I don't think that time is here yet. The time may come eventually, but even some of this stuff, you get this parabolic puke to the downside and it's getting interesting. It's getting interesting, to say the least. Similar to meme coins, honestly, we've got the SPY, this is the 30-minute chart. Time frame is really irrelevant. It's really the duration that it's been bearish. It's been strictly bearish since end of February, middle February. Similar to BTC, we're at a yearly pivot. Will this be a low time frame inverted head and shoulders? There's some sort of broadening, expanding channel wedge thing going on here. We're in the wheelhouse of the high time frame double top measured move, again, similar to BTC. And if this fails, I'd expect BTC to test 75. So it's definitely something to watch this week. You know, how does Powell on the podium affect the SPY Wednesday? ES opened down today, which is futures. Monday, is it a bloodbath again, right? Do we see new lower lows here? Do we see a div on this Monday into Tuesday into Wednesday? Does this inverted head and shoulders actually play out? Do we get a 4-hour candle close? 30-minute candle close above the cloud here? Like, all of this is so bearish, but it's trying to hold levels. So we'll see. Very much an if this, then that statement for the week. And really everything else just like doesn't matter, right? Because if the benchmark of the universe is breaking down, it's going to take risk assets with it. So it would be more beneficial for the bulls if the SPY wasn't as angry as it has been over the course of the next week. Some metal stuff quickly for the metalheads out there. GDX, this is gold miners ETF. This had a breakout beginning of 2024, my bad. And that target remains still the case. It had a cup and handle here on lower time frames recently. Target's 52.58, target's 62.80. I mean, there's nothing bearish here at all, which is a breath of fresh air relative to these crypto charts, right? And this is probably the more appropriate way to look at this now. Again, similar 64 or 82, whatever. It looks good to the long side. You've also got the GDX GLD ratio, which also looks good to me. That's inverted head and shoulders, bullish cloud breakout. You don't have a bullish cloud yet, but not bearish. It's always dangerous to buy lagging beta after a move on gold like this. But you've really got defined downside. You know, you don't want to be below the cloud on the weekly. You don't want to be below the cloud on the daily. That's 39, right? Like, so you size it out appropriately and you let it play out. Here's copper on the weekly. If you know anything about Dr. Copper, this doesn't exactly scream global recession. And this does have a nice move, potentially, here on the weekly. It's going to be slow. This is a multi-year pattern, but it's at the breakout level and it's certainly not bearish. Something that's not as bullish as gold miners and copper would be platinum and palladium, SPPP. It's getting there, probably worth an alert at 10, but not quite there yet. Trying to inverted head and shoulders, triple bottom there. Done a whole lot of nothing for a good long while. And that's what you want to see after a major move down like this. It went from 20 to 10 and has sat here just under 10. So definitely one I would keep an eye on if you're a metalhead. On crypto equities, MSTR has a defined risk reward here. Is it in bullish territory? No, it's all actually in bearish territory. It's super early to open anything and stupid to open anything, probably, just as I did last week. But there's some supporting evidence here. You have a bull div that's not shown on the RSI on the daily. You've got your W, you've got a falling wedge. You are still in a bear channel. But if we're trying to check the boxes of bullishness, can we get out of this bear channel? Can we reclaim the midpoint? Can we reclaim the cloud? Typically, triangles break when 3/4 complete, so it's probably a little early on this, but stop loss, lower lows, target other end of the pitchfork sometime in Q2. I'm not as confident on this call yet as I was back here in September, October. It's not really a call anyway. It's really just an if this, then that statement. And I'll just add more if we keep going, which is probably unlikely. It's unlikely that we're able to actually pull up to 350, but we'll see. I like the double bottom. I like the div. WGMI is another one where you've got this huge puke from 30 plus to 15, top of the channel to the bottom of the channel. You've got a bull div here being worked on since end of February. And again, you have a defined risk reward. Stop loss, new lows. Target, probably 20 from here. Is it a 30x retire early trade? No, but it's an interesting setup. And that's all we can really ask for in the current environment. And then lastly on Tesla, we did have a massive pin bar, massive dragonfly, whatever you want to think of this, last week. But we are in this very ugly zone of below a weekly support in the Kijun, above the weekly cloud. And the best setups on this have come after a weekly breakout. July, we were all over this one. The other one off the screen in 2020 was a weekly breakout. So the next best trade on Tesla from a high percentage hit rate would be a weekly breakout, which isn't going to happen probably until the end of the year, maybe Q4 if it happens. And this could be a sign of things to come for BTC because, again, we do not want to be in this very awkward spot where we are below weekly support on the Kijun, but above the cloud. That is not any place anybody wants to be. Downside there is 55, and then this becomes resistance, and then all the bullish signals flip. It's just not a good look for cycle enjoyers, especially. That's all I have for this one today. Give me a like, dislike, comment, share, subscribe, and happy trading.